Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about welspun corp, whether it is a buy at current levels or whether you'll see some kind of downside in the stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Wellspun Cost, a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. Even a $2 membership will go a long way in helping me. Once you get the $10 membership from me, you'll have access to my portfolio, my watch list, which is an improved watch list in which there are about 70 stocks which I like a lot, and with the levels at which to buy, even for a short term trades one can buy, and with stop losses, etc. So there's a whole gamut of that available as an Excel sheet on that watch list. Plus I put up a lot of podcast, 3 to 4 podcast a week. I do put up with respect to particular stocks or sectors which are exclusive for these members on Patreon and not for YouTube. So kindly be a member there, and hopefully you'll gain a lot. For detailed market talk or companies that you're holding separately, individually, you can email me and we can work things out. Now about the company, welspun Corp was established in 1985, and they manufacture tubes and pipes in stainless steel and exotic materials. They have businesses across Europe and US as well as here in India. They produce longitudinal pipes, especially they have leadership in hot rolled steel plate pipes, so HSAW. They also produce HFERW pipes, etc. A market cap of the company is around 3000 crores. If you look at the financials of the company, then sales grew by around 5%, which is commendable considering that we are looking at Q1 of this year, in which we have had around 45 days of complete shutdown. They had a profit dip of 70%, but came out with at least a profit of 31 crores and not losses. Lower taxes also helped the numbers. They have reasonable debt, as you would understand with all ancillary, you can say infrastructure ancillary plays. So you look at other companies in this domain, Phenolex, etc., and many other companies which are into infrastructure ancillary, be it wires, cables, or cement, etc. They have, all these companies have debt. So a company like Welspun would be having that. Return on equity is pretty good at 22, over 22%. Operating profit margin of around 11% is also pretty good. If you look at the performance of the stock, then stock is up 60% in the last 18 months. Has fallen sharply in March fall. So when the February and March fall happened, then we had a fall of around 70 to 80% in those 1.5 months. Did recover from the lows, but is still struggling at around 120 rupees. There's a decent promoter and institutional holding. The margins are pretty good, and the dividend payout is also there. So the company overall is pretty good. The problem that lies at the moment is that the space that it is into, the infrastructure ancillary space and the space of, you can say, pipes and all these things, it is not doing well for the last, you could say, 3 4 years. So it is bound to have that problem with it, that the growth performance is not that stable or consistent as we have seen with consumer stocks. If you look at the technicals of the stock, then strong short-term support is around 90 or so, around 90, 85, 90. It has run up and it is at around 114. The 200 DMA is around 110, so a very short-term trade could be taken with a stop loss at 109. And once it takes out 120, which is it is close by, then we could see a serious up move towards 150, 158. Currently, the sector is under stress, so you have to be careful taking a trade into such stocks. The very long term support is around 70. So what would be prudent to do is probably buy on declines towards 100. 90 to 100 with a stop loss at 70 rather than buying currently. Stock has been doing well recently, as I have explained, but with market being jittery at 12,000, I could see a fall of around 4 to 5% in the market in a day or two. And that could happen in a week's time, that could happen in a 2 weeks time, but the fall of 5% will happen inside 2 days. So this will be a sharp vertical fall, and in that we could see such stocks like Wellspun fall a lot, so that would be an opportunity to buy. So what needs to be done? If you have it, then hold it. Wait for major declines to add more. Probably, as I explained, around 15% fall from current levels for closer to 90-95 would be much better levels to get into. If you have a good 4-5 year time frame, you will get the stock at 180-200. You will get to see a 70-80% up move midway somewhere, and that is the time to get out when things are very, very good or looking very good for this space. That is the time to book profits rather than holding on to the stock for a longer period of time. That would be my suggestion. Do not invest more than 5% of your holding, and can look at pure cash or consumption businesses rather than looking at businesses which are into infrastructure or real estate or ancillary plays of this sort. Even if you're looking for ancillary plays, then look at companies which are more leadership, like you have Havels, etc. Those are more leader oriented rather than looking at Wellspun. Economic revival will take stock higher basically. So if there is a complete economic revival, economy grows at around 5-6% annually consistently, then you'll see these stocks move up higher. So this was a video on Wellspun Corp. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.